Hi, everyone, and welcome to our program on Social Security planning. For millions of Americans, Social Security is a critical piece of the retirement puzzle and an important source of retirement income. Now, the goal of today's program is to help you learn more about Social Security so that you can make the best decisions for yourself and for your family. Now, firstly, before we get started, we're not affiliated with or endorsed by the US government or the federal Medicare program. The information we'll cover represents our understanding of how Social Security works and should not be considered legal or tax advice. And no part of this presentation is intended to make an offer or sale or a purchase of any specific security or insurance product. Now, today's topics will include what is Social Security, where does it fit in with your retirement plan, and when to claim Social Security benefits, factors that affect your benefit amount, Social Security taxation, Social Security and Medicare, and finally, how to file for Social Security. So let's get started. Now, Social Security helps form the foundation of your overall retirement plan, your retirement income plan, and is one of the many important decisions you'll likely have as you transition into retirement. Now, your choice of when and how to file for benefits can have a significant impact on how much guaranteed lifelong income you and your spouse will receive throughout your retirement. So pay careful attention. Now, Social Security is more than just a monthly check. It has 6 distinguishing features that make it a unique and valuable retirement asset, lifelong income. Social Security provides a lifelong stream of income that a retiree or their spouse cannot outlive. Stability. Benefits are not impacted by stock market volatility, inflation. There's inflation protection as well. Social Security benefits are usually adjusted annually to reflect cost of living increases, and every October the Social Security Administration determines the cost of living adjustment increase for the following year. Spousal benefits. Benefits may extend to a current, former, or surviving spouse. Tax-favored benefits. Benefits receive preferential tax treatment compared to other sources of retirement income. And there's government promise. Benefits are backed by a promise from the US government. In summary, Social Security is the only income stream that is inflation adjusted, lasts as long as you do, is tax advantaged, and is backed by a government promise. So think about that. Can you think of any other retirement income stream that has not just one or two, but all 6 of these characteristics? Now, today, Social Security is one of the largest government programs in the whole world. An estimated 50 million Americans currently receive retirement benefits, and this includes 97% of our elderly population. Now, a common question that many people ask, and I think everybody asks actually, is will Social Security be there for me when I retire? As a result of increasing life expectancy, changing demographics, and economic influences, Social Security as we know it may see some changes in order to maintain the financial stability of the program. But even without any legislative changes, Social Security should be able to pay full benefits through 2033 and 77% of the scheduled benefits thereafter. So that's somewhat good news. Now, where does Social Security fit? For some people, Social Security could be the largest piece of the retirement income pie. For others, it may be the smallest. But for the average worker, Social Security replaces about 40% of their past earnings. Now, it's important to look at the entire picture and evaluate each source of income you'll have. In addition to Social Security, you may also have an employer pension. Now, these are becoming somewhat more scarce. A 401k, personal savings, or an annuity. Even if you have a sizable retirement nest egg, Social Security will still deserve your attention. As we just saw, Social Security is just one piece of the retirement income pie, but over time, these benefits can up. For example, if you retired with a monthly benefit of, let's say $2,000 at 66, your annual benefits would start out at $24,000 a year, and your lifetime benefits could exceed $700,000 if you live to age 90. Now, there are two main factors that determine your retirement benefit: your lifetime earnings history and the age when you choose to start receiving benefits. In order to qualify for retirement benefits under your own record, you need 40 credits, or basically just 10 years of work. Your benefit amount be based on your averaged income monthly earnings during the 35 years in which you earned the most money. A formula is then applied to determine your primary insurance amount, also known as the PIA, which is the benefit you would receive at your full retirement age. Now, your annual Social Security statement is an excellent resource for estimating how much your monthly benefits will be in retirement. You can go to the Social Security Administration website at ssa.gov to create a profile and view your current statement. It's quick, easy, and it's secure. So make sure you go there and check it out. Now, one of the changes that was implemented to help keep Social Security going was increasing the traditional full retirement age from 65 to 67. Now, your full retirement age is now based on your year of birth. For instance, someone born in 1956 has a full retirement age of 66 years and 4 months, and someone born in 1960 or later has a full retirement of 67. Now, the age when you file for Social Security benefits is a personal decision that will impact the amount of your lifetime benefits. So making the right decision is critically important. You have the option to receive reduced benefits as early as age 62, or you can wait until your full retirement age and your benefits will increase all the way to 70. Now, if you start taking Social Security early, your benefits are reduced, but you will receive more monthly paychecks for a longer period of time. On the other hand, delaying Social Security results in fewer paychecks, but the benefits and subsequent cost of living adjustments will be larger. Although there are many factors to consider, such as survivor benefits, opportunity costs, and inflation, a break-even analysis can be a useful exercise in determining when to start receiving benefits. In theory, if you live to average life expectancy, your results are often similar, no matter when you begin to take Social Security. However, if you think you'll live longer than the average life expectancy, then waiting for a larger monthly benefit might be a better decision. Now, what if you continue to work? You can still continue to work and also receive Social Security. However, there are some limitations depending on your age. Earned income from wages or self-employment before your full retirement is subject to the earnings test, and your benefits will be reduced if your income exceeds certain income thresholds. The good news, though, is there is no loss of benefits after your full retirement age, regardless of earned income, and any amounts withheld will be added back to your benefits after you reach full retirement age. Now, when is the best age to claim? Difficult to say, really, because unfortunately there is no single best age to claim. Social Security has many combinations of rules and benefits which can impact the claiming decision, and everyone's situation is different. The benefit you'll get over your own lifetime depends on three primary factors: your earnings history, your election age, and of course, how long you live. Other factors that can influence the election decision include your health, your marital status, and your desire to continue working and access to other income if Social Security is delayed. So let's review here. You can begin to collect retirement benefits beginning at age 62. However, your benefits will be permanently reduced and continued employment is subject to the earnings test. Now, at full retirement age, you'll receive your full primary insurance amount, or PIA, and if you're still working, the earnings test no longer applies. After the full retirement age, your worker benefits will increase each year you delay, which can add thousands of dollars to your lifetime benefits. However, this increase does not apply to spousal benefits, and increased benefits end at age 70. Now, if you've never married or not married to an eligible worker for at least 10 years, your benefit options are fairly straightforward. Claim now or claim later. As you make your decision, you may consider factors such as whether to wait in order to delay retirement credits, and if you're still working, how the earnings test may affect your benefits. Now, spousal benefits are a key component of the Social Security system. You'll find that Social Security is very generous to married couples and provides benefits even if the spouse never worked or didn't have enough credits to be eligible for benefits. There are three types of benefits offered to those who are married: spousal, divorced, and survivor. Now, if you're married, you'll generally receive the greater of your own benefit based on your individual earnings, or up to 50% of the spouse's primary insurance amount. Spousal benefits are available to those who have been married at least 1 year and are 62 years of age or older. However, the working spouse must file for benefits before spousal benefits are available. Benefits are reduced if you claim early, and you do not receive delayed credits past the full retirement age. Divorced couples married for at least 10 years may also be eligible for spousal benefits, even if the primary worker has remarried. So the Social Security rules for divorced people, divorced couples, are generally the same as those for married couples. However, there are a few differences. And let's go to them. Another way a spouse can receive Social Security benefits is when their spouse passes away. Now, this type of benefit is known as survivor benefits and is available to widows, widowers, and surviving ex-spouses. And the benefits can be as high as 100% of the deceased spouse's actual benefit. But it's important to remember that a spouse can collect survivor benefits and at some later point switch over to their own benefits. In other words, collecting survivor benefits will not affect your own benefits. Now, we are rolling through this pretty fast, so if anybody has any questions, maybe you'd like to type them into the chat box now. I'll give you a minute to do that, and I'll grab my coffee. And then we'll proceed. No questions so far. Everybody good? If you can hear me clearly and see the PowerPoint screen, up there. If you could just type a Y in the chat box, just want to make sure that you're all sitting comfortably and getting this information. So if you could do that for me quickly too, that'd be very helpful. I'd know that everything's working. That'd be good. Okay, a flurry of Ys in the chat box. That's good news. So let's keep rolling. Now, where are we up to? Claiming considerations for married couples. Okay. Let's look at some common planning considerations regarding married couples. As a general rule, do not claim benefits early if you plan to keep working and are subject to the earnings test, okay? Spousal election decisions can have long-term income impact on the amount of benefits being received. Let me just go to the chat box. Is it marketing research? No, we're not doing marketing. This is just an educational webinar for our clients to better explain. A lot of them have asked Social Security questions. Is a good way of answering them at one go, basically. So no, it's not a marketing research session. Thank you for asking, though. Anyway, let's move on. Next slide, please. Here we go. To maximize benefits, married couples should coordinate their claiming strategies and plan in terms of joint life expectancy. For instance, delaying the benefits of the highest earning spouse can help maximize both the retirement benefit and the survivor benefit. If income is needed, it's often beneficial to start the benefits of the lower earning spouse first. Okay, does that make sense? Now, if you who were employed in both if you were employed both in the private and public sectors, you'll receive benefits from both Social Security and maybe from a non-covered public pension. If that's the case, your Social Security benefits may be altered or reduced. There are two kinds of offsets to be aware of. The government pension offset only applies to spousal and survivor benefits. If that spouse or survivor receives a government pension, the windfall elimination provision applies to a worker's benefit. Social Security benefits may be reduced but not totally eliminated. This provision would also reduce any claimed spousal benefits. So moving on here, depending on your income, Social Security benefits, retirement benefits could be subject to taxation, as you can see here. Now, Social Security retirement benefits are taxed differently than other types of retirement income, which may provide advantages for some people. The IRS determines what percentage is taxable based on a provisional income formula. Now, this is a chart that shows various provisional income levels and what percentage of Social Security is subject to taxation. For instance, a married couple with less than $44,000 of provisional income will only have up to 50% of their Social Security benefits subject to taxation. But as your income increases, more of your benefits become subject to income tax. So please talk with a CPA or tax professional with questions regarding your own situation. Now, Medicare may also impact your Social Security benefits, and Medicare Part B premiums are automatically deducted from your Social Security benefit once you sign up for Medicare and you're also receiving Social Security benefits. So if you aren't receiving Social Security benefits, you will actually get a bill for your Medicare premiums. And what's more, Part B and D premiums are higher for those with higher reported incomes. Now, when you're ready, there are 3 ways to file for benefits: by phone at 800-772-1213. Okay, online, as we said, on sss.gov, and in person at your local security office. And, you know, they're in every major city. that has Social Security office pretty much. So they're easy to find and easy to visit, though you will need to make an appointment apparently now. You can't just walk in. Anyway, to wrap it all up, Social Security is the foundation of the retirement income plan. Understanding your options and making informed decisions can help you to maximize your benefits. So thank you for your time and attention today. We hope this presentation has helped you better understand Social Security benefits as an important part of your retirement planning journey. And if you have any questions, you're more than welcome to give us a call. You can call me on 888, I don't know if it's that clear on the screen, but 888-894-2929. Again, 888-894-2929. And my email is also on the screen, but that's, again, in case you can't read it, I don't know how well that came out on that. It's garyc@eliteprospeakers.com. Again, garyc@eliteprospeakers.com. So if anybody has any questions, we have a couple of minutes before we wrap up. So type in the chat box. I'll give you a couple of minutes to do that. And then we'll wrap up. And when we do, a short survey will appear in your browser. And if you'd be so kind as to fill that out, that'd be great. And we'll email out a 120-page ebook we have on holistic retirement, which I think you find very interesting indeed. Appreciate your time and your patience. And let's give you a minute or two while I drink yet more coffee, and then we'll wrap up. Okay, don't see any questions there, but if anybody has some they think of afterwards, again, my number is 888-894-2929. Happy to answer any questions, and you're certainly welcome to shoot me an email to garyc@eliteprospeakers.com. Make sure you fill out the survey, which will pop up when we sign off, and we will get that ebook over to you, and I hope you like it. Let me know what you think. Thank you very much, everyone. We're going to stop recording now. Let's see. Here we go.